Now, a lot of us are very familiar with the JP Morgan Nasdaq Equity Premium Income ETF known as JEPQ, and a lot of you guys even watching this video probably own some shares of it. Now, across my portfolios, I own hundreds of shares of this ETF, and I've said multiple times that this might be one of my favorite, more income-focused ETFs as far as high quality goes across the entire market. But one thing we haven't necessarily talked about on my channel in detail is what would happen if an investor, hypothetically speaking, bought $100,000 worth of JEPQ based off its current numbers and current dividend yield, and then from there never purchased another single share of JEPQ, just turned on dividend reinvestment and let the years fly by. Well, I went through some numbers and actually figured this out, and the outcome is pretty shocking. So in this video, we're not only going to go over this ETF, explain how it works and why I'm such a big fan of it, but then towards the end, I'm going to share with you guys what a $100,000 investment could potentially look like later on, invest into something as high quality as JEPQ. So if this interests you at all, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, like I said earlier, I personally own hundreds of shares of this ETF, and I bought majority of my shares over a year ago. Now, just as of recently, I have personally been grabbing some more shares of this ETF, just because honestly, I'm such a big fan of it. Now, the reason I personally am a huge fan of this ETF is because it offers NASDAQ 100 exposure, but with less volatility because, of course, of the use of written out the money index call option. So basically, ETF buys into the NASDAQ, writes covered calls, written out the money covered calls to be exact, and then allows investors to capture a little bit of upside, but a massive amount of income every single month. Now, historically, that's exactly what JEPQ has done. Some months the dividends are bigger than others, of course, and this is due to things like volatility or option premiums. But as of recent, we're looking at anywhere from 50 cents, even upwards of 55 cents. And even on the low end, if we were to annualize out the lower end of payments, we're still talking like a 6, 7, 8% yield. Now, because of the most recent larger payouts, JEPQ is offering north of a 10% yield, which is massive. And the fact that this ETF also has had some nice upside over the last year or so, along with those massive dividends, more and more investors, as far as I've been seeing, have been adding more shares of JEPQ to their portfolio. Now, what's crazy is that on the max time frame, JEPQ is up around 13%. And again, this is for a more income-focused ETF that utilizes a cover call strategy, which means the upside is going to be captured to a certain degree. And that's one of the things a lot of investors do not like about the cover call strategy. They say, well, the upside's captured. So let's say the NASDAQ really decides to rip. You're not necessarily going to make as much money as you would have if you just bought into the NASDAQ directly. And even though that is true, that happens to be the case in most circumstances, something like JEPQ might not see as much gains as an investor would see based off the NASDAQ, but volatility is also going to be partially capped because of that cover call overlay. So this gives investors like myself sort of a unique exposure when it comes to the NASDAQ. And at least historically, like I said, it's offered some upside. I mean, ever since I started buying into JEPQ, it's been trading up into the right a lot. But also, like I shared with you guys earlier, tons of dividends paid out every single month. Now, on the 1 year time frame, JEPQ is up around 13.8%, year to date around 11%. And on the max time frame, like I said, there was a short period where JEPQ was trading down, but ever since then, it's been trading up into the right, other than a few short times in history. Now, to give you a more detailed look on JEPQ's performance on the max time frame, this ETF over the last 2.54 years is up around 14% plus on average every single year. This is annualized out with dividends being reinvested. Now, if you were to decide to take those dividends every single month and spend them, let's say on your expenses or on something else, whatever the case might be, you still would have seen around 12% average annual total return, which is not bad whatsoever, especially for an ETF that is sort of favoring income potential now instead of later. But now it's time to go through the real reason a lot of you guys are here. We want to figure out what a $100,000 investment into something like JEPQ, which currently offers around an 11% initial annual dividend yield, around 0% expected annual dividend amount increase because we don't really expect JEPQ's dividend to get much bigger from here, around 4% annual share price appreciation. Again, this could go up or down. Over the last 3 or so years, we're up around 4% as far as price goes. Now, this is going to be 30 years invested, $0 of annual contribution after that $100,000. Now, the only contribution will be from DRIP, so these dividends are going to be reinvested along the way into more shares of JEPQ. So just based off of all these numbers, which are of course just estimated, let's see what we get. So year number one, that $100,000 principal investment would surprisingly already earn investors over $11,500 per year in dividends. Now, it's kind of shocking how high this is just right off the bat, but keep in mind, this is of course because $100,000 goes a long way when you're investing in something that yields around 11%. Now, after the principal increase, because of course we're expecting JEPQ to go up in price over time, and after those dividends be reinvested by year number two, we're at $113,000 plus and over $12,600 per year in dividends. Now, by year number 5, we're up to $164,000 and over $16,000 per year in dividends. Again, just based off that 100K initial principal and just letting the compounding effect do its thing. That would take around 7 years based off these numbers to surpass $207,000. And at this point, you're at over $18,700 per year in dividends. Now, 9 years in, that $100,000 initial principal would be over $250,000 with over $21,000 per year in dividends. By year 15, $466,000 and over $30K per year in dividends. Now, of course, it depends on what your expenses are, but at this point, you're earning a lot of money in dividends that can definitely potentially at least help with things like expenses, some of your bills, etc. At 21 years in, we're over $784,000 potentially and over $40K per year in dividends. Now, skipping all the way down to the bottom, that $100,000 initial investment could potentially, remember potentially, just based off these numbers, turn into $1.642 million and over $55,000 per year in dividends. Now, one thing to note here is that because we said that JEPQ is not going to go up, is not going to have an increase in dividend whatsoever, that's why the yield goes down lower and lower, because this math is pricing in the idea that JEPQ is going to get more expensive over time, but the dividends are pretty much going to stay the same. And this could, of course, happen this way, or of course, we could see an increase in dividends or a dividend decrease, who honestly knows. But regardless, it's kind of interesting to see what potentially just a $100,000 investment into one of the highest quality and one of the most popular income-focused covered call style ETFs could turn into. Now, I also think it's important to note that investors that buy into something that offers a high amount of dividend growth over time is going to most likely outperform something that's initially offering a high yield. Something like SDHD or the Schwab US Dividend Equity ETF over a 30-year time frame. I've went through this before, and just based off of the current numbers, something like this is going to outperform something like JEPI or JEPQ all day. And this is simply just because the power of dividend growth and earning more and more income consistently over the years is honestly really hard to beat. So now that we went through one of my favorite income-focused ETFs across the entire market, like I said, JEPQ, an ETF that I personally own several hundreds of shares of and get paid from it every single month. We talked about what a potential $100,000 investment could turn into later on. I lastly want to hear from you guys down below. When it comes to JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF, how many shares of this one do you have across your portfolios as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.